Hey everyone, welcome back to Corporate Decoder, the place where we decode the dusty pages of corporate filings to find the juicy bits. Today, we're diving into a report from International Media Acquisition Corp, a company that sounds like it is about to swoop in and grab some headlines, but might be feeling the pressure to ink a deal. So, what is going on here? This is an 8K report, which basically means something pretty important just happened that the public needs to know about right away. Think of it like an urgent bulletin from the company. The key date here is the 26th of November 2025. On this day, International Media Acquisition Corp, or IMAQ as we'll call them, made a move to buy themselves more time. This filing tells us they put down a $2,000 payment. Now, $2,000 might not sound like much for a big corporation, but in this context, it is actually pretty significant. It's an extension payment. They're essentially paying for more time. Time to do what? Time to find and complete a business combination. This is typical for what are called special purpose acquisition companies, or SPACs. They exist to raise money to buy another company, but they have a deadline. And if they don't find a target by then, the money usually goes back to the investors. They needed an extension, moving their deadline from the 2nd of December to the 2nd of January of the following year. Now, to understand why this extension matters, we need to look at what this company is all about. IMAQ is registered with the US Securities and Exchange Commission. Often called the CC, they have common stock, warrants, rights, and units, all registered on exchanges. Think of these as different ways people can invest in the company, like owning a piece of the pie, or having an option to buy a piece of the pie later at a set price. Their common stock, warrants, rights, and units are all listed, which means they are publicly traded. The units are interesting because they often package together common stock and warrants, giving investors a bit of both. The currency involved here is the US dollar, and the units are measured in shares. The company is incorporated, meaning legally set up in Delaware. This is their commission file number, a unique identifier, and this is their IRS employer identification number. Their primary executive offices are located in Miami, Florida. Their main phone number is 2129603677. IMAQ checks the box to say they are an emerging growth company. This classification often means they have a bit more flexibility with certain reporting requirements, which can be helpful for newer companies trying to get off the ground. They have elected not to use the extended transition period for complying with new or revised financial accounting standards. This means they're playing by the latest accounting rulebook, which suggests they might be confident in their financial reporting or want to appear robust. So, back to the main event, this report is primarily about other events, and the event is that payment for more time. It signals that finding a business to merge with is proving to be a challenge, and they really want to avoid running out of time and potentially having to return all the money investors gave them. It's interesting to note here that while they have these securities registered, it says none for the name of each exchange they are registered on. This might seem odd, but for SPACs, it's common for some of their securities to be traded OTC or over the counter, rather than on major exchanges like the NASDAQ or New York Stock Exchange from the get-go. Now, what does this really mean for IMAQ and its investors? SPACs are essentially blank check companies. They raise capital through an IPO, and then they have a set period, typically 18 to 24 months, to identify a private company and merge with it. If they fail to do so, the SPAC is liquidated and the cash held in trust is returned to the shareholders. Thus, this $2,000 payment is essentially a signal of their continued determination. They are trying their best to avoid a liquidation scenario, which would be a disappointing outcome for the SPAC sponsors and the investors who believed in their ability to find a valuable target. Looking at the overall situation, IMAQ is in a race against time. The market for SPACs has been pretty tough lately. Many companies that went public via SPACs have struggled to meet investor expectations. This means IMAQ not only has to find a company to acquire, but also that the company they choose needs to be really compelling to win over investors in a potentially skeptical market. The primary risk here is that they might not find a suitable merger partner within this extended time frame, leading to dissolution and a loss for stakeholders. On the other hand, a successful merger with a promising private company could unlock significant value. The key will be the quality and valuation of the target company. Will they find a gem, or will this extension just be delaying the inevitable? Alright, that is our quick decode of this IMAQ filing. What is your take on these SPAC dynamics and whether IMAQ will find a partner in time? Let us know in the comments. If you found this breakdown helpful, please hit that like button. Subscribing ensures you won't miss our future deep dives, and join our Discord community, linked in the description below for more real-time discussions. Thanks for watching, and we'll see you in the next one.